All right. Good afternoon, everyone. Tim Davis here again, coming to you guys with another market review. Today is Monday, June the 6th, 2022. The now time is now 4:23 p.m. And as I spoke before, I think somebody asked me, could I possibly do these reviews every day? And I responded. I said I will try to do them as much as I can. So since this seems to be helping folks, so during the week I'll try to decipher and just take a look at the technical aspect of each day's action. And then on the weekends, I'll try to take a look at the bigger picture. So today, as I notated over this past weekend with this week's weekend's weekly market review, I stated that the VIX, something to pay very close attention to because the VIX was in a range, was right back at a support level where it's seen bounces before. And I'm gonna show you something how when you can spot a strong level of support or resistance, do not ignore it. Pay attention to it because normally that level sometimes can be an accumulation phase or distribution phase where they're unloading or loading or reloading for a move higher. And it seems to me that the VIX is definitely gearing up for a possible big bounce. As you can see, I have not got rid of this trend. I'm sorry, this level of support that I have spotted on the VIX that dates way back to February. Okay, this area of distribution and accumulation dates way back since February. And what I mean by that is that it's been either a strong level of support or a strong level of resistance. On the left side of the screen, you'll see, and this is a daily chart we're looking at right now, I believe. So I have to check. Nope, I'm sorry. This may be a 4-hour chart. Let me get rid of this for a second. Yeah, this is a 4-hour chart we're looking at right now. So near-term action 4-hour chart, as you can see on the left side of my screen. Back in February, around February the 7th, I just circled where this area was a strong area of resistance. Got rejected, pulled back, only to come back to retest this level and then punch through it. And what does it do? Look at that, come right back down and test it again as a level of support now. And what does it do? Breaks out to the upside. Come back down again, didn't quite make it all the way there again, but price action rallied again and eventually came back down to this level again, and this time punched right through it. It hovered there for like maybe a day or so. Then we came right back down to it, through it. Then what happens? Around April, rally back up to it again. Look what happens now. Now it becomes a level of resistance again. Resistance held there, came back down a little, came back up, challenge resistance again here, held there. That was around April 11th, came back down again. Try to challenge it again here. Didn't quite make it all the way back up to the area, but here we go. Here's a good challenge. It was around April the 18th, came back down. Look at that, 1, 2, 3, 4, 5th time's a charm, breaks right through it. Now, form of resistance, always say form of resistance becomes support on the way back down. So we rallied up to that ultimate level of resistance where I am, I'm a betting man. If I was a betting man, I would say we're gonna break right through this eventually, which is around that 39 or 40 level. And I think we are going to hit that level and break through it eventually. I think it's going to happen. I don't think it's too much, weighing on our economy for it not to happen. Now we came back down from beginning of May down to about within the first week of May. Look at that, perfect bounce off of that level after consolidated for a couple of days. I mean, maybe about a day or two consolidated and then right back up again. Didn't quite make it all the way back up to the top of the range, but consolidated a bit here and then came back down. Where to? Back to support. So far, 1-2 test is showing to be a strong level of support. Price action on the VIX has not broken that support level, which is in between 24 to 25 bucks. Rallied again here, May 16th. Then we started to work our way back down. Right around here. So this takes us to around May the 30th or May the 29th. And look what happened here. Got a little test here. Came back up slightly. Came back down. And for several days, so almost a week now, we have been hovering in support. All right. It looks to me that the VIX is gearing up. It is staging. It's gearing up. This support level has shown to be extremely strong. It's like it is setting up. This has now, to me, become a launching pad for the VIX to eventually bounce in a major way. So this is something to be watchful for this week. Either the VIX is going to break down and break through support and come down. That's not my likely scenario. I believe the VIX is going to hold a support level and eventually find a way to break out. Now, let me show it to you another way. So this is a strong area of resistance. And I am going to draw a trend line right up. Try to draw a trend line right through this. This is what I actually see. It looks like the VIX has been wedged into a corner, folks, for a breakout. It's either going to break out to the upside or break out to the downside. If it was my guess, I would say it's going to break out of this corner, break out of this wedge pattern to the upside. So that's something to pay close attention to this week. And if you look at the look down at the bottom at the full stochastics and wins percentage, and you'll notice how it's been starting to formulate these higher lows along the way. See that? An extreme low here, went up, came back down, created a higher low here, higher low here, higher low here, and you see the same type of setup within the wins percentage. So it's all signs to me pointing to a possible break out of this pattern on the VIX very soon. That could happen sometime this week, folks. So that's something I'm really paying attention to for a possible breakout of the VIX away from that $24, $25 level back towards 30, and then maybe even well beyond 30. So that's what it looks like. That's what the VIX looks like. Now let's take a look at the major indices. Okay. All right, so that's what our VIX looks like. And if we just for the heck up, for the sake of it, take a glance at a weekly chart on the VIX. And I'll point something out here. Look at the wins percentage. Look like the VIX on the wins percentage is attempting to hinge back up. What's the catch the same, like it's maybe starting to hinge back up on a weekly chart. So that is a strong signal. that the VIX may be preparing for a possible massive bounce. Also, again, I always like to highlight this, folks. Here's the VIX showing 1, 2, 3, 4, 5, 6, if we count this week, 6 red candles in a row on a weekly chart. That to me is what's called a stale red light, which means multiple red candles in a row, especially when you look at the weekly chart. Sometimes and then back to a level of support. All right, that's important. Back to a level of support. The previous time we had these red stale lights in a row, you broke through support, right through it without hesitation. VIX is struggling now to break through support. So with that said, this red stale light, eventually you're going to see some green. We could be definitely in store for a major breakout on the weekly chart. So if we start to see movement on a 4-hour and a daily chart, eventually that could be a longer term continuation of a rally in the VIX over a couple weeks span back up to these levels. So that's something to keep in mind, that all signs are pointing to the VIX finding support where it is now, and possibly looking for waiting for an opportunity just to bounce off of that trampoline that it's sitting on. So that's something to pay close attention to. Now, another indicator that I like to take a look at to see what the overall rather the market is showing us is the SPXA 200R. And this pretty much is shows the percentage of S&P 500 companies trading above their 200-day moving average, which is another tool that gives you some type of insight of where the market could be heading. Let's switch this to now. So here's a daily chart of this tool. And what I'll point out is that this is upper trend line of this tool, lower trend line of this tool. It looks like we could be stalling out halfway and maybe ready for a move back down. That's a strong possibility. We tapped the top of this level back in April, right around here, and we traded back down. The lowest this percentage has gotten so far this year, right around 0.22. Now let me draw your attention to a monthly chart. So I always like to show this to folks. This is what I believe we're setting up for. You see the monthly chart, we've been in a steady downtrend since we hit the highest level we've probably seen in almost history, possibly history. 97%, which means 97% of the S&P 500 companies were trading above their 200-day moving average back in around between April and May of 2021. Since then, you see this channel, we've been in definitely a downward trending channel where majority of stocks have been just continuing to drop below their 200-day moving average. Right now, it's sitting at a level of 34.34, which means 37% of the S&P 500 companies are trading above their 200-day moving average. And we dropped to as low as 2022 about a month ago. Now, we could be possibly heading towards the bottom, but nobody knows. Nobody can tell that. As this tool is starting to point to some oversold so extreme oversold points on the full stochastics and the limb percentage. However, the RSI is still in a trend downward, creating lower lows along the way, and it's nowhere near oversold territory. So say that to say there's still a lot more room to the downside if this indicator chooses to do so. Now, look at history. Every time we have gotten up around this 97, and we have between 95 to 97 area, the market has struggled. Overall market has struggled. We're seeing that 97 area around 2021. And since then we pulled back. We've seen it 2020. We pulled back in a major way. We've seen it 2011. We pulled back in a major way. And we hovered around here for quite a bit. After we had that big rally in 2009, we hovered here around that 95 to 96 area for about a year and a half. So prices were pretty good, stable. And then we pulled back. And of course, the big one, 2007, hovered around a level. And then all of a sudden, towards the middle or the end of 2007, we started to take that longer term housing crisis pullback with a couple sharp rallies, bear market rallies on the way, which probably fooled a lot of people, and then continued to sell off until we got down to, look at that, 0.01%. And I do believe we are headed there. That is my ultimate target. I think we are headed there. So I think there's a lot more room to the downside in this bear market that we're currently trading in. So that's a quick look, quick glance at the bigger picture of the overall breadth of the longer-term breadth of the market. All right, now let's go ahead and take a look at the major indexes, how they fared today. And again, here's a daily chart of our S&P. And of course, I've been tracking S&P with the Fibonacci retracement tool. And as you can see, what price action has done so far is that we traded down from the level that we seen back in the early part of March, down to a level of about 38.10, down to the 38.2% Fibonacci retracement level, got a little bounce, and look where we're at now. At a level of resistance, struggling to get back above a level that we broke down before below. So this was previous resistance here. So it's previous resistance here, broke through that resistance level. Previous resistance becomes support. I'm sorry, this was support. I'm sorry, this was support on this side. There was support here, it was support here, it was support here. Previous support becomes a level of resistance. So now price action is struggling to break above the ceiling. So that is a strong level of resistance for the S&P. And if we look at a 4-hour chart, you'll see the beginning stages of the struggle. Beginning stages of the struggle, you see it's been beating, it's bumping its head up against this level. So again, the S&P is inverse related to the VIX, and I already showed you what's going on with the VIX. The VIX looks like it's on a launching pad to go higher. Well, if that looks, the VIX is like it's setting up on a trampoline to go higher, then you know what that says for the S&P. S&P is butting its head up against the ceiling and is struggling to break through that level of resistance. And look what's happening to the full stochastics. It's already starting to trend lower. Look what's happening to the Williams percentage, already starting to trend lower. And look what's happening to the RSI. It's also already starting to trend lower. So eventually, it looks like there's a strong possibility that the S&P will not be able to break this ceiling. Instead, at some point, it's going to trickle lower and break some of these levels of support, short-term support, and come right back down, maybe back towards that $3,800 level. So that's something to pay attention to this week, because this week it's going to be a determining factor. By the end of the week, we could see lower prices in the major markets and high prices in the VIX. So that's something to pay close attention to. That is the S&P. Now we'll take a look at Dow Jones. So the Dow Jones is hovering just above its 23.6% fib retracement. And it looks like it's going to not be able to sustain that level. And if we look at a daily chart where I have moving averages, we'll see how the Dow Jones is stuck in between two moving averages. Right here, stuck in between my 20-day and my 50-day moving average. And as you can see, this 50-day has been acting as a strong level of resistance, strong ceiling. The Dow Jones has been battling with this ceiling since May 27th. So for over a week now. Eventually, somebody's going to win, and I think it's going to be the Bears. I think the Bears are going to push this price action right back down to that 20-day. I don't think we're going to find a way to break above that 50-day this week. That's just my opinion. All right, let's look at the Dow. Now let's take a look at the Nasdaq. Okay, here's our Nasdaq. It is hovering just above its 20-day moving average. So it's using that 20-day as a strong level of support. But I don't think it's going to hold. I still think it's going to break down below that level. That's the Nasdaq has just been one of the weaker of the bunch because between the Nasdaq and the Russell in general. Here is a weekly chart of our Nasdaq, and as you can see, there was a bearish crossover of the moving averages back in April with Nasdaq. So we had the 20-day crossing below the 50-day, and it's also doing it on the others, but this one seemed to me to be more dire because when they made that cross, you can see the acceleration to the downside just continue to get worse. Now, on a weekly chart, the Nasdaq is still above its 200-day. Honestly, I think that's going to give way before this year's out. That 200-day, I think it's going to give way, folks. So as the 20-day and the 50-day comes down, you'll see price action and the moving average start to meet somewhere, and we'll probably see this big reversal back down to the downside continue. So right now on the weekly chart, I still think that this area here is going to be an area where we'll probably see the Nasdaq play around in over the next month or so. But in the near term, I do think we're going to be heading back lower to test that 50% Fibonacci retracement area of the Nasdaq. So that's a look at our Nasdaq again. I think we're going to be possibly coming back down to retest this 50% Fibonacci retracement area in the near term. All right. Now let's take a look at crude oil. There's no other way to put it, folks. Crude oil is still in a strong uptrend. Even you know, with some of these levels that it may seem to be overbought, I think crude still has a lot of gas in the tank. It's just finding a way to continue to trickle higher. And if I was to blow up this 4-hour chart, 4-hour chart is just telling a story. I mean, on a 4-hour chart, the crude has been bouncing perfectly off of some of these moving averages. We had to sell off or pull back down below the 50-day, and then look what happened. Run right back up and start to use the 20-day as an area of support. Back down to the 20-day, back up. Back down to the 20-day. Now, where do we go? Did we break this? Or did we go back up? We'll have to see this week, but I was bet, man. I say crude is going to find a way to continue this move up, continue that bounce up. And then if we look at the bigger picture, look at the bigger picture. Here we go. Look at the full stochastics. Came down. Looks like it's curling back up. Even with the RSI on a weekly chart starting to hinge a little bit, I still think we can stay up here for a minute and continue to head higher. If we look at the price action on the weekly chart, look at what it's been doing. It's been using that 20-day moving average, even on the weekly chart, and just been forming this cup-like pattern, and looks like it's ready to continue to trend higher and possibly break this level right here. And if we break that level, folks, we're going to have to revert and pay our attention to the longer-term monthly chart. Let's see what are some possibilities. Here are some possibilities. The only other possibility I see is for price action to find a way. If we break out above that 130 level, we could test that 130 level and pull back a little bit. Maybe back to this level support right around this 120 level. But if price action comes back to test this 120 level and hold that level, the next level we could see is that 147, folks. Then that's when we had to see what price action starts to do, because last time we got to that extreme level on crude back in 2008, 2009, we know what happened. There was a big sell-off, and that was back then, I believe, what we called the capitulation phase. That's when everything started to sell off. Stocks, oil, everything started to sell off. So we got to watch that and see what happens. If we get back to that level, we can start to see a washout in crude, possibly, and that means that the markets will probably really accelerate to the downside. So that's something I'm watching. I'm paying very close attention to. As price of crude goes up, what I am noticing is that, look at the full stochastics. It looks like it's starting to trend a little bit lower. So paying attention, close attention to all of that, because if and when crude starts to reverse, if it makes it to these extreme highs and crude starts to reverse, we could see overall capitulation in the market. So that's something to pay close attention to. All right, and gold is still stuck and can't get out of its way. So still stuck right around this trend line, and so I'm just not sure where gold could be headed. It's still just stuck in a range, and it's still hovering right around a level of support. And it's just taking a while for it to get to take this bounce. And if we look, and this is a monthly chart, so we take a look at the wins. I'm sorry, full stochastics. It's just trending downward and has had a negative reversal with this green line crossing back below this red line. So it's just trending downward, but price action is just standing around that support level. So I think eventually, we'll see a nice bounce in gold eventually. It may take a while. It could take next 6 months to a year or so, or it could happen soon. Just don't know with gold barely moving, but it's holding a support areas pretty well. Here is a weekly chart of gold again. A couple bounces here, but price has been muted right below its 20-day and just pushing right back towards that trend line. Same thing with silver. Now silver's below on this weekly chart. It's below its 20-day and its 50-day. But it's holding the support level, long-term support level, right around that $21 level. So 21, yep, around that $21 to $22 level. So it may be probably just a matter of time. I think eventually gold and silver will find a way to go higher. It just may take a while. And that could be when, we start to see an overall capitulation in the market. So we have to see how that pans out over the next couple months. All right, folks, that is all I have for you guys on today, I believe. Again, pay attention to the VIX, because I think the VIX is going to be best indicator of direction on this week. So I've been watching the VIX futures very carefully. So every time the market begins to run an even, I'm always paying attention to VIX futures and seeing where we could possibly see a possible bounce in the VIX. And again, pay very close attention to the VIX. I think the VIX is at a point where we could see a major bounce. And that's when we'll probably start to see some more of these big wild swings. All right. All right, folks, enjoy the rest of your day, and I will catch you guys some other time this week, maybe tomorrow, just not sure. Depends on how my schedule goes. All right. Have a good one.